Moving on, the rest of my trades should go quick. I have no exit on Snap, and I am okay with that. I bought the volatility expansion. Look at Snap on the daily. Saw a large gap up. We saw consolidation. This is a high and tight bull flag. I set an alert here. I forgot about the alert. Snap is not on my watch list. I'd taken Snap off of my watch list, but I understand the environment that we're trading in today. We're seeing just short squeezes left and right. And I know Snap has the ability to move and to run. So I buy the volatility expansion. I pay way too much in premium on Snap when my Snap position is underwater all day. I pay $30. And if we go there's something now. This is the option chain pricing of the option chain. So my Snap entry was at 4 o'clock. Where is that chart we were looking for? Look at this volatility expansion that I buy into. The highest price you can possibly pay for the option is 30 cents. That is the price I pay for the option because we broke that level. That's significant. Oh my gosh, it's a lot. I hope this isn't awful for you guys. But we broke this level. Showed up here, pre-market. Showed up here actually in hours, and we sold off from it instantly. And now we saw a large volume spike. Take it down to, let's go 3 minute. We saw some chop again. No major selling. No, yes, we violated the lows of the first 10-15 minutes, and then we saw price expansion above the highs, consolidation, and more price expansion. I don't know how much Snap is going to run today. There's no way. But if you buy a long contract up here, you're paying for the implied volatility expansion through this entire range. I understand that, and I bought the IV expansion. I paid 30 cents. These contracts traded for 24, 23, 26 cents all day long. This shit did nothing for me all day. Does that concern me? No, because where's my stop? I don't really have a good stop. I don't have a great entry or a great risk to reward here, but these two contracts cost me 30 cents. I'm up huge for the day. I've had a good day yesterday. I can read the tape a little bit. I'm confident in what I'm seeing, and this is sideways consolidation. Could you stop out here at 1708? Absolutely. But why? There's no reason for it. We saw large price expansion and move away from VWAP and EMAs in the first 15, 20, 30 minutes of the day. We know that that is going to happen. We know that that is what happens every minute. Not every minute, every day. It's the most active trading time of the day. It's the first hour and the last hour of the day. So I bought the volatility expansion hoping we were going to continue to see some shorts get squeezed and price just to crush higher. We did not. Instead, we traded sideways. VWAP held, never came down. I gave myself a very generous stop loss. I would have taken a hit on this position, unwinding it, or rather selling the opposing strike, but that would give me the opportunity to unwind it the next day. So now that I'm long this, I set an alert, I drop a level, and I walk away. Cool, my alert hits. Cool, these levels break. Cool. I'm up huge. I go on a walk. I don't care. Dude, I'm just having a great day, man. Let's use. I'm pretty sure I think I used this. I used something as a stop loss level. I got an alert while I was on my walk, and I checked and looked at the chart, and it was just a wick, and it wasn't really anything for me to be concerned about. So I just held it, and I just rode it all day. And that was the plan. It was a small capital position with favorable market conditions, ascending triangle chart pattern here, VWAP holding as support. I can walk my stop loss level up as I want. I have an order. Move my face. I would have an order here, let's see. So I have a working order here. My stop loss triggers. I come over. I hit replace order. I hit the middle, or I hit the ask, the bid. I don't know. I really don't know anything about trading. And then I get out of the trade. That's as easy it is for me to exit. I understand. I'm not. I'm gonna. It'd be like worth $12 or some shit. But it's part of the psychology of your stop loss hit. You get out. That's the trade. You're done. Move on. Snap just went crazy higher. I never closed it for the day. I didn't know that, and I'm up $52 on contracts are worth the 60 at the ask. I paid 30, so I'm up 100% on them. I'm gonna do TQ and VIX, and then I'm done. I have a lot of long exposure at this point. Also, I just recently lost money trading TQ. I'm a little bit kind of revenge trading it here, but I also understand that the laggard sector issue could be a thing. So I have on TQ and QQQ a level here at pre-market, a level here that we sold off from drastically lately, early in the day yesterday. And just an alert set. I wasn't looking for this alert to trigger or anything, but the alert triggered, and I went and took a look at this trade. So activity-wise, it wasn't much. These contracts I went in the money or close to in the money, way more expensive than what I'm used to buying. $250. I usually don't have much capital in this account, but I do have it now, and I know that when I sell the position to close it, I will receive capital back, so I'm able to get some exposure, especially because I want to see if TQ can continue higher. So at 622, I get triggered in right here. I get an alert here for whatever reason. Yeah, I got an alert. I dropped to new levels. Always drop levels, and hey, someone tell me if it goes above this price. It went above that price, traded sideways, and then I saw a micro bull flag, a break above, and I wanted to see a break above 69.14. We did. We saw all of that, and then we saw some volatility come in. This is FOMC minutes coming out. I get wicked out. I don't care, man. I'm up. I'm a robot. I need to hit my stop. I hit my stop. I get a shit fill. I could have got filled at 215, 220. Also could have got filled at 180. The spreads were very wide. I made a post about it. One moment. I'm going to show you this. Look at this spread. This is what I owned. I owned the 69, the $2 bid and $3 ask. They widen out the spreads, and this is 1 or 2 minutes before the FOMC minutes came out. We saw some volatility. I got wicked out. I don't care, man. That was my TQ trade. It continued up. It looks like we are ripping after hours. This position will increase in value because I own some positive. Where am I? I'm supposed to be on TQ. Because I own $2 a delta or something. I own some positive delta. If I want to, I can unwind this. I can buy to close this and then just hold this position and let it ride higher tomorrow. Be in the money. My delta will increase, and it's not a bad way to manage trades. That's what I'm trying to present here. Last trade we are doing finally. Thank you for sticking around for way too many of my words. Is VIX. I'm comfortable trading VIX. When VIX spikes, it's wild, it moves, and it is a volatility indicator. We don't know what the FOMC is going to do when the FOMC minutes come out, but we can deduce from all logic given to us at this point in time that they are going to continue to inject liquidity into the overnight lending markets, which is exactly what they said they did, along with make money available and free to whoever needs it. 15-minute trend change on the VIX. I'm long a lot of delta, man. I'm long a lot of delta in my account. I understand I carry large risk, and it's all to the long side. So I'd like to get some VIX exposure just in case. Dude, I don't know. You're supposed to hedge eventually, right? So here at this level, 36.43. We see some price action above it. I get a bit of FOMO. I hit the bid. I buy the volatility expansion. We chop around. VWAP holds at 36. There's decent EMA and VWAP confluence and price level and some decent bid support at 36.30. So I set my alert at 36.30. Did I get whipped out? Yeah. Do I care? No, because I lost $28 on that, but I also hold two VIX contracts into tomorrow that I can unwind. And if volatility goes crazy, I can drop the short legs. I can buy to close these, and I can ride the long legs as long as I want, and I can exit them. It's a day trade. I have the ability to day trade. So that is my day. This number is going to change last night. It changes drastically and dramatically as these bids and asks, especially on all these spreads and all this shit that I own right now is going to change. At the open, my P&L will have wild swings as market makers figure out how to price these things and what have you. I've 5 hours, I'm not into 4 hours, whatever. I'm not entirely sure how I'm going to unwind everything yet. I'm going to record my screen all day tomorrow, but the nice thing about this, I don't have to do anything until I want to. I don't have to unwind CCL in the first 10 minutes of the day, or the first 20 minutes of the day. If I'm long, and I am, and I'm seeing crazy weakness, or if I'm long delta, which pretty much short or neutral everything else, and I'm seeing crazy weakness off the bell, I'll probably I just sell the spread. I collect the premium on the spread, close the trade, move on, look for something else. But I don't. I'm done. I have $330 in my account. Tasty Work should force liquidate me right now. I'd have $900 in my account. I started with $3. I traded really well. I'm really proud of myself. And that is... Oh, my face has been in the middle the whole time? My bad, guys. Fuck. I don't know if you got to see any of that. Jesus. Oh, whatever. That's my day. Thanks, guys.